Clearly, you are feeling a fresh round of pain right now. What is your strategy? What are you buying? What are you selling?
Well, we keep our eye on the prize. We have a 5-year time horizon. And actually, when we go through a route like this, first of all, the rotation now is happening very quickly. It started off slowly and is happening quickly. So I'm happy that the market is broadening out. This was the case in late 16 as well. Value took off and left growth behind. And whenever I see that happen, I say, okay, this bull market has broadened out. This is good news. What we do during these periods is concentrate our portfolios towards our highest conviction names. And so that's what we're doing. We had extended the number of names in the portfolio from the low to mid 30s at the bottom of the coronavirus. And now we're at roughly 55 for our flagship fund. And we are starting to sell the more liquid names and buy some of the more pure play names. So the more liquid names are either more mature, the Facebooks, the Apples, and so forth, or they are participating in innovation, but they're not pure plays. So Regeneron, Novartis, and so forth. So more liquid, in order to have cash-like instruments to use at a time like now, and move, again, concentrate towards our highest conviction names.
So let's talk about Tesla then. You said that you were only going to buy the dip. Are you going to continue to buy the Tesla dip now that it's dipping even lower?
Yes, we can buy a stock up to 10% of our portfolios. And that's certainly in the ETFs. We report our holdings at the end of every day, so anyone can see that. And yes, we have been building whenever we can. Now, we built up to 10% last week, so the stock behaved in line with our portfolio. So again, we can't buy anymore here. If it were to deteriorate at a rate beyond that of our other portfolios, so drop below that 10%, we would then have the latitude to buy more, of course.
Now, you've said you're going to put out a new Tesla price target. The market is anxiously waiting for that. When are we going to see that? Can you give us an idea of what the target will be?
It's going to be I'm going to say a couple of weeks. We're getting compliance is helping us cross our T's, dot our I's, and do everything we should do before we send it out. But the two things that have happened to Tesla since our last projections are, one, it has increased its market share. When we put out our original $4,000 price target, so the equivalent of $800 now, we thought that Tesla's share would drop from 17%, this is share of the electric vehicle market, global electric vehicle market, from 17% then to 11%. Instead, its share increased as others with wonderful brand names started increasing the number of electric vehicles in their companies. So that was a big wake up. In the United States, I think Tesla, through the third quarter at least, was still 80% of all electric vehicles sold in the United States. So pretty stunning. The second thing that has happened is autonomous. The probability that Tesla gets autonomous right, we believe has increased from the 30% that we had in our base case in our last model. What's interesting about autonomous is the margins in autonomous, the gross margins, are in the 80% range. The margins for electric vehicles alone are in the 25 to 30% range. This is a 5-year projection. So the model changes completely if Tesla gets autonomous right, and we think it will.
Now, as Ed said earlier, look, ARK came back even stronger after the big pandemic shock, but we seem to be in a totally different environment right now. Right now, this seems to be happening because of rising yields. How do you come back even stronger this time?
Well, truth wins out. We know that our focus on disruptive innovation is going to be very productive. We're focused on 5 platforms involving 14 technologies, all of which are moving into exponential growth trajectories. And beyond that, many of these technologies are converging. So autonomous taxi networks are comprised of 3 technologies or 3 platforms: robotics, autonomous vehicles or robots, electric, they will be electric. Electric is going to be the cheapest way to go. And artificial intelligence, they will be powered by artificial intelligence. Now, those are 3 S-curves coming together, and we think they're going to cause explosive and highly profitable growth. And I don't think most research departments are set up to focus on innovation this way. They're very siloed, specialized. We're focused on platforms. They're focused on sectors. And we're focused on the 14 different technologies associated with those platforms. These S-curves are going to collide and create so much positive energy that we think analysts, traditional analysts especially, are going to be gobsmacked, shall I say, by how powerful these are going to be.
Curious, Cathie, what's your relationship with Elon Musk? How much contact do you have with him? What kind of conversations have you had? Any fun and crazy stories?
No, we did our podcast. Actually, the way we do our research is we will speak with IR. We don't want any special treatment, but we have a 5-year time horizon. And so we are really asking more technology questions than anything about the short term. So you can see from the podcast, I think March of 19, as the stock was cascading downward, we had a fantastic, Tasha Keeney and I had a fantastic podcast with Elon. And that podcast is evergreen because, again, we're talking about long-term time horizons. So you'll see how brilliant he is and how focused he is on Tesla. And we did talk about the crypto decision, the decision to shift some cash into crypto. Certainly, we were fully supportive of that. Any company on the right side of change should do diversify in that way.
Okay, but should he keep diversifying, or is $1.5 billion enough for you?
I'll leave that to their judgment. We of course, and I know believe they should keep enough cash on their balance sheet to support their operations. And I think with the focus on their cash, that they are not going to do anything wild and crazy here.